HedgeNordic, your single access point to the Nordic hedge fund industry. HedgeNordic is delighted to host this panel of 4 CTA multi-managers. By the nature of the game, these experts are among the most sophisticated and knowledgeable CTA investors in the world. It is the first time these 4 managers appear on a panel together in any shape or form, so buckle up for some unique insights into managed futures.
We saw a little bit of noise in March around the short selling bans, but generally speaking, all the managers themselves were moving to remote locations and operating fine.
There was also another proof, like after 2008, that showed how important the operational infrastructure is for trading and execution. Every broker and like any financial institution, including ourselves, well tested with backup disaster recovery sites. So if you need to transition your entire team to another place, well tested works. But now this, with the pandemic, people were dispersed and everybody needs to go individually to a home office setup. So that seemed to be affected some of the brokers.
Obviously, given the run in equity markets, managers were long equities. However, if you look at the portfolio across multiple different trading strategies and stress test those portfolios against previous crisis type events, they were actually positioned quite defensively. The one thing that you saw across the board, there were very few managers that made money in equities. The vast majority of managers lost money in equities. They came into February 19th long, they reduced that exposure, They got short eventually, but it wasn't generally quick enough to make a lot of money in equities. The big component of performance dispersion was really how you fared elsewhere, be it in commodities, currencies, or interest rates. And that's where we saw tremendous dispersion among managers.
Nonetheless, the dispersion levels were very, very high across the sector, which is obviously can be a challenge for investors when they look at the space too.
If you want to generalize, you can see 4 things. First is that large established managers underperform the smaller, older or younger managers, but large players have underperformed in March. This, as Roger said, the slow moving system also have underperformed the faster, the more reactive systems. And as Chad said, the financial heavy managers underperformed the managers with more commodity focus. There was more protection to be found in commodity markets. But what we've also found is that once again, more complex approaches have also underperformed in these crises than more, let's say, I don't want to say simple, but let's say more robust, more pure. And we try to be very active all of the time, not only during crisis, but this 4 to 5 weeks was really the most active I have seen RPM since I joined in 2005.
There were really no surprises in the portfolio. It was managers reacting and responding as we would have expected.
We've all been through it. As I look around the panel, we've all been through lots of crises over our career together and separately. But every crisis is similar and every crisis is very different, and it's only when you sort of live through them, the rear view mirror tells us what it felt like. So I think, what was different about this was just the speed.
Investors always would hope for more. We as an investor would have hoped that our trend followers were up 20 to 30% in the first quarter.
Yet again, our strategy, our industry, functioned normally through a crisis. I think that's, again, testimony to what has all been around a long time, but equally, I think that's worked extremely well. And that's always a source of assurance to clients as well.
If markets are manipulated, anchored somewhere, money will flow. And I think what we have seen with this massive sharp and the speed of the sell-off and the subsequent rally, also driven by a lot of growth and technology companies, we believe that this divergence between markets and the underlying economy at some point will narrow, normalize. There will be trading opportunities.
What investors have woken up to in the last 4 or 5 months is uncertainty again. And I think we're still digesting that globally.
Some things remain very much the same. Understanding your portfolio, understanding the risks, understanding the opportunities, monitoring positions, seeing how managers respond. All of those key components are unchanged.
With any of these extraordinary market environments or moves, investors screen back what has worked. And I think what we saw, if you look and zoom in, especially into March 2020, tail protection, tail hedge, long volatility, and trend following CTAs delivered.
HedgeNordic, your single access point to the Nordic hedge fund industry.